A lot of DeFi investors, they completely overcomplicate literally everything about DeFi investing. The goal is to be a long-term business owner where you're taking the hard-earned capital that you're using that to buy long-term assets that will win for sure. And my preferred strategy is then to borrow against those assets and use that equity. You're literally inventing money from the crypto you already own. You're pulling equity while maintaining full ownership and control, and you're using that to create cash flow. But too many people, they try to get cute with their pools and try to make as much money as possible per day, and that is not the strategy. Here's how you want to think about liquidity pools. Liquidity pools are like a giant swing trade that gets progressively more powerful and makes you exponentially more money the longer the trade takes. It's different than day trading. Day trading, it's intraday, right? Like maybe you're trying to make money at the end of the day, you're trying to make money at the end of the week, maybe swing trading. This is a long-term swing trade with pools, and it's leveraged from your initial capital, that's your long-term holdings. And again, the longer it takes to get there, the more money you make, the more exponentially powerful it gets. Because here's the thing. We have our liquidity pools over here, and let's just take ETH USDC, for example, over here. This pool right here, it's from $1,600 up to $4,600. It is a very long-term trade that has lots of time to play out. If we just look at the chart over here, if we look at the weekly chart, it has nice lows at about that $1,600 that it's touched twice in the last, let's just say, about 2.5 years. 2.5 years. This is a long-term trade. The top at 4,600. Well, that's the all-time high we recently touched over in like September, October-ish, right? This is a very long-term play, and this is why it is so powerful. The longer this takes to play out, the more money I make each and every single day. I'm making 120%. If this takes 1 year to complete, if this takes like 10 months to complete, I will double my bag. I will double my portfolio in this position. So I don't need the market to perform one way or the other. I just need it to take its time. And when the market does go back to its highs, my spot bags that are lent on the side will appreciate like no other. But this is why it's so powerful. You want to set these wide ranges, one, because it's nice to consistently have the cash flow in. You're not having to make new decisions. You're not having to reposition capital. You're not stressed about any type of price action, whether that's up or down, happening in the market. But what this does, this 10% a month you're making plus, depending on the pools you're running, it could be more, it could be a little less. You take that and you're able to just keep buying more Ethereum, keep buying more Bitcoin. Whatever those coins are for you, maybe it's some riskier alts that you do want to buy on the side with free capital. You can take those bets for free, and the longer it takes, the more assets you actually get to accumulate and acquire. The longer this takes, the more 10% a month months that I have, and I can buy assets for cheap. And when I'm buying Bitcoin at 60K, when I'm buying Ethereum at 2K, if I'm buying Solana at $80, when the market goes back to highs, when my pools finish their long-term swing trade back to, let's say, ETH at 4,600, all the spot ETH I'd been buying doubled. So that 10% a month, that's 20% a month. The longer it takes, the more I have, right? The Bitcoin doubled. The 10% a month I was making, 20% a month. Solana, if you're buying right now, $80. Let's look at Solana chart. Should be a nice little 3x. If you are wanting to pick up bags of Solana at $80-ish, that's a 3x back to 240. That is crazy money. In hindsight, you were making 30% a month if you're putting that capital to work in smart positions that will win for sure. And again, win for sure. You don't want to put it in speculative stuff that may not win. If you do, it's risk-free capital. You might hit a juicy 5x on something like SUI. I do love me some SUI. I have some exposure there. Maybe one day we'll get that $10 SUI and you'll hit a nice crispy 10x off that. But again, you don't want to put the whole portfolio on something crazy risky. Like one of my Athena plays that I bought recently, I bought in, down 50%, right? Win for sure, right? The farther you go down the market cap list, the harder it gets to be in that win for sure frame, which is where we want to stay. So again, guys, you want to be able to set these ranges wide to where you don't have to worry. Where my Chainlink exposure, it's set in ranges that make sense on the weekly frame. And it's saying 5% right now. It's doing more like a 60% APR, but it's from $8 up to the mid-20s. And mid-20s is where we should be selling our Chainlink anyways. And the longer it takes for Chainlink to go back to those prices, the more freaking money I make. Modad's a little bit of a newer token. I have it set from pretty much the range lows to the range highs. Currently, we haven't had any price discovery outside of that, but I basically have the widest range set I can for these assets where I am just printing money every single day. 156 APR, it's about 15% a month, a little less than that. And it's just freaking printing. $17 a day. It's been about 3 or 4 days now, and it's made me $71 in the last 3 to 4 days. And it's just consistent. And you set yourself up to win for sure. And again, the longer it takes, the better. And this is the beauty of actually getting cash flow in, is that you don't need anything to happen today. You don't need anything to happen tomorrow. In fact, I really don't care if 2026 is a bullshit year for fucking crypto. If we go sideways for the next year, that's perfect. Look at my APR on screen, 120%. I will have more than doubled my bag at the end of the year with nothing happening. More than doubling my DeFi portfolio. And I can use these profits just to funnel back into more of the core lending assets, Bitcoin, wrap Bitcoin, Coinbase, wrap Bitcoin. Use the cash flow to just keep accumulating more assets, get more Bitcoin, get more Ethereum. I'm sure we have probably a little something on Avalanche over here. Boom, get more Chainlink. We're using the cash flow to stack as many assets as possible. If we get a year of sideways, DeFi pools are the best thing you can have going for your portfolio. But trust me, you want to be running it with this. This is the best strategy you can run, where you're borrowing equity. You're inventing free money from your spot assets to run pools, because you're going to get full appreciation. When the market comes back, when Chainlink, let's say, goes from $8 right now back to $24, $25, you will 3x every bit of Chainlink you have on the side. And not to mention, you're gonna be getting appreciation out of these pools as well. You're gonna be making lots and lots of money off of appreciation, not as much as the spot assets, but that's why they're there. This is how you supercharge your portfolio, and I am more than okay with the price going sideways for literally the next year. If we get 2 years of sideways, that's even better, because it's so freaking easy. We're literally farming just free money. And so I don't think there's any better way to play it. There's no better way to make money off your money. Like if you want to go travel abroad, if you want to live in Thailand, the money is just coming in each and every day. And you guys can do it too. And lots of you guys have. I've been seeing the comments on the YouTube channel, seeing the comments in the live streams, you guys showing up saying that, hey, the market moved down, my monad position is down $200, but I offset that and made $400 freaking dollars. There was a chat like that today. That's the whole point, to make money no matter what. And oftentimes it offsets these bad months that we have in crypto, if not outperforms. Those guys with those monad pools outperforming how much money they would have lost just holding spot. It's absolutely crazy. There's no better freaking way to win in crypto than running liquidity pools. And if you supercharge that portfolio by running nice wide ranges that will perform well over the long term, you're inventing money, borrowing that from your collateral assets, your long-term capital assets that you believe in, your Bitcoin, Ethereum, Solana, maybe Sui, these strong assets that you believe in long-term. If you have those as your fucking reserves, your treasury over here, and you invent money, you monetize that. Guys, you cannot lose. You set yourself up to be in that win for sure position. That's been my motto. Been preaching that to you guys, been preaching that to Jake, all his guys as well. Win for sure. You win when we go sideways. You really win if we go up, and you offset, if not still win on the way down. And if you aren't earning crazy on the way down, you're still offsetting that loss. And when the market comes back and stabilizes, you are in crazy profits like you've never been before. If you guys have any questions at all, drop them in the comments. Of course, if you want to join our 10K fast track, where we will get you started as soon as possible. You avoid all the pitfalls, all the mistakes, and we get you started to making cash day freaking one. Hopping inside the modules, one-on-one calls with me, hopping on our group calls in the community as well. 150 other members inside our 10K fast track here. Guys, the link is down below. I'll throw a little QR code on screen. I would love to see you on the inside. And if not, I'll see you in the next video.